Trade war fears dominated headlines last year. How concerned are we about what happens to the economies in the United States and China as a result of these?
It should be obvious to people when you think about the way we would think about markets that fear of a false factor is always bullish because the fear is in the marketplace today, and when the falseness ends up being seen as falseness, the fear reverts to normal. In just the same way, big fear of a little negative is bullish because the big fear is in the marketplace in advance. When it's finally seen that it's just a little negative, that reverts. It's not as positive as fear of a false factor, but it's still a strong positive. We documented this all last spring and summer. The total magnitude of supposed trade war tariff issues, which end up being truly, if they were all implemented, fully in, all of it, from every country, is just taxes. If you aggregate those taxes and think of them as a percent of 1 year's global GDP, it's minuscule. 1 year's GDP growth, it's minuscule. Therefore, this is big fear because of the framework that it's presented to us in. People have a bias that says tariffs must be bad. It's big fear of what is a negative, but it's a little negative. Big fear of a little negative is bullish. How long does it take us to get to that realization? Well, I don't really know. We're still talking, as we are talking here today, about concerns of trade war with China and the U.S.-Chinese trade talks. How that plays out, impossible to know. But it's big fear in the marketplace of what will be a little negative at worst, and therefore that's bullish.
And an important feature of what we're always trying to do in the research department is to scale things appropriately, to take economic events or market events and to be able to measure them relative to the total to see if indeed, is that a big thing or is that a little thing? And what Ken was talking about, if scaled properly, is a very, very teeny thing.
You know, with all these types of fears, people often talk about a catalyst event. What's the catalyst? How do you know the all-clear signal has been shown? And even in the case of a trade war or other things like a government shutdown, it's not always completely clear, and yet the market can move on beyond those things without an all-clear signal. That's true for bullish fundamentals as well as it is for false fears, which is that you may not get a decisive event in the China-U.S. trade talks. Maybe we will, maybe we won't. But even without it, the markets can just start to normalize it. At some point, they stop fearing it and they move on from it. And in fact, that's the typical way these things happen, especially as you're coming out of corrections, because it will be very seldom, if ever, that you'll get the media saying, all these things that we worried about, they're not really anything to worry about anymore. Instead, what they're on to is the next cycle. They're on to the next media cycle, whatever the next story cycle is. And that tends to leave investors behind. Markets pre-price, they look forward, and that's why investors need to be in while the fear is in and let the gains happen from there versus waiting for an all-clear signal.
And for views on current events in the world of investing, visit marketminder.com. Updated daily, it offers on-demand access to Fisher Investments' most current thoughts on capital markets and the global economy, as well as our sometimes irreverent commentary. We hope you will enjoy it.